On this video, we're going to take a closer look at server shipments and also how big the AI servers are for this market. Like always, I'm joined by an amazing co-host. Today, I'm joined by Billy. Good afternoon, Billy. How's it going?
Good afternoon, Jose. It's going well.
So, Billy, you sent me this article earlier today or yesterday, I believe, that I thought was pretty interesting. TrendForce. We cover TrendForce. I want to say. I think about. I think I say it every time we do something from them. They have a lot of great information for free. So if you are a semiconductor investor, definitely check out TrendForce. They post great reports. Some are paid, some are free. This one's free right now, and they're talking about the server shipment, Billy, right? And these server shipments, they're being used. This is something that's used in huge cloud server providers, right? Microsoft, Google, Amazon for their AWS. And also these shipments sometimes are also coming from OEMs like Dell and HPE. So right now, we are seeing this huge push in AI market. In this AI space, we keep hearing how it's great news for data centers. It might be great news for cloud server providers, and it might be great news for um, semiconductor companies as well. But then we see with all this AI push, TrendForce just announced that they expect the server shipments to fall an estimated 2.85% year over year in 2023. So some people might be wondering, hey, Billy, how is this happening, right? I mean, we're seeing this AI push. Why is this fall expected? Right now, Billy, right, this overall market is being hit by a lot of headwinds. Um, Servers demand in China, for example, are pretty is pretty low still. Even though we talked about it in an earlier episode, how this is a place that has kind of opened up their economy again, and many investors were expecting maybe a bigger rebound in this part of the world. Unfortunately, that's not the case. The second thing is we are seeing kind of inventory correction in a lot of products here in the semiconductor market, both in the consumer space, but obviously in the enterprise market as well. And that's while there might be some improvements, those improvements are not as big as many might have expected. And the final thing, right, Billy, is server shipments. While it's obviously impacts certain things in the AI market, there's a lot of kind of servers that don't really deal. I mean, from this TrendForce article, the AI market or AI servers are still a small portion of total server shipments. It's actually less than 10%. So these other servers are probably just CPU based or some other types of non accelerated base that are still driving demand in a lot of these cloud server providers. Billy, just kind of before I go a little bit more on these topics, any thoughts here on this kind of server shipments? Are you surprised that AI servers are less than 10% of the total server shipments? And in your best guess, do you think AI servers maybe in the next few years could be a bigger portion of the space?
Discover the world of semiconductors without getting lost in the technical jargon. My new membership offers a perfect balance for investors looking to understand this exciting market. Using my electrical engineering knowledge and experience, I will release weekly exclusive videos ranging from quick 5-minute 101s to in-depth analysis, covering not just popular chip stocks, but aiming to explore every public semiconductor. Plus, join a private community of like-minded investors. Finally, I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
Well, they're definitely going to become a bigger portion of the space over time, but we're starting from a very low base. And I think, we have to remember that AI, the portion of servers and overall tech that goes to AI is still pretty low relative to the rest of the entire global industry. And we're seeing that here. I mean, obviously, you saw China continues to remain depressed, coming even after they lifted COVID restrictions, and we don't know how much longer that's going to continue. they'll probably need some sort of stimulus there, but they have plenty of debt problems and real estate problems, so won't hold out for that. And then obviously, if you've been listening to the big cloud providers in the U.S., we talk about how all of them are seeing big deceleration in cloud growth, and not only that, but also extending the expected life of all their servers. I think, was it Alphabet or Google reported a first time ever profit in their cloud division. But part of that was because they extended the life of their servers from like 4 to 5 years. So if you
Mhm.
think everyone's looking to save costs and optimize their infrastructure and make it last longer so they don't have to spend more. And that's across the board because of the interest rate increases and the expectations of a slowdown, which is pretty well telegraphed. And so everybody is sort of doing this all at once, every industry. And so it's leading to very big slowdown in cloud spending and compute. And if you have a big slowdown in cloud spending and compute, you don't need to build more data centers with more servers than you think you need. So I think that's just all hitting at once here. And it is different than the pandemic, because when the pandemic shut down, you had some businesses that obviously tried to cut everything as much as they possibly could, but then you had other online businesses that saw huge demand. But here you're sort of seeing all businesses across the economy try to optimize and pull back. So it's perhaps not surprising. It looks like, again, we bottomed in Q1. So they're saying like a 15%, 12 to 15% decline in Q1. And then we're going to have sequential growth in Q2.
Mhm.
It looks like about 9%, but the sequential growth is, I guess, less than people expected after the huge cut in the first quarter. So again, it goes back to what we've been hearing over and over again. People think everything bottomed in Q1, but the recovery is pretty muted so far, even if it's incrementally better. So that's why you get the full year that doesn't quite get back up to even, it looks like. But in the long run, AI will make up a larger portion of the industry, and that's going to grow. And eventually, the Fed will be done with its interest rate hikes, and we either have a recession or inflation will come down. And after that, we should probably get companies spending again, as they will have optimized their footprint. So we're going to have a down year in 2023. I don't think it's the end of the world for these companies. And a lot of it's been factored into their stock prices, or at least it was earlier this year. A lot of these companies have recovered, or these stocks have recovered. And it's to be expected in tech hardware that you're going to have these sort of cyclical down periods. But I still think the long term is pretty bright for cloud infrastructure and computing power.
Definitely, Billy. And I want to say that there's a few things that I thought were interesting about here. You mentioned one that we're seeing kind of these cloud server providers really kind of extend the life of their servers, like Google, like you mentioned, and it's kind of also pushing the OEMs like HPE and Dell to kind of extend their support for these older platforms as well. On the other hand, it does seem like certain semiconductor companies are also kind of delaying maybe the release of certain products because they are seeing that, hey, maybe some companies are not in the need to upgrade right now, so there's no need for us to kind of push our new product right now. Maybe we can wait an extra quarter or so where the market might kind of pick back up. The other thing, Billy, that I thought was pretty interesting here is I do kind of want to tell investors or viewers that one of the biggest distinguish here between AI servers and global server and just overall servers. Overall servers, most all servers have need some form of processors. Actually, most of them tend to be x86, but obviously there can be some other forms of processors. The biggest differentiator between an AI server and kind of your typical server is they tend to have AI server tends to have some form of acceleration processor in the form of typically a GPU, but there can obviously be some other forms of processors, of accelerators as well. And I think this is why it's important to kind of understand, again, and I think this is always important for any investor to understand where your company plays within that space, right? So let's say for Intel, for example, Intel, their CPUs are probably going in a big majority of products of servers. So even if AI servers are growing, because the total addressable market is declining, maybe Intel might not experience the growth or the tailwinds from the AI space. But then obviously the biggest player in this space right now that's really gaining from AI is Nvidia, where maybe back then their GPUs weren't going in every single server. Their products are most likely being used in a big portion of the AI servers. So while the total addressable market for total global server shipments is decreasing because they are seeing the growth in AI servers, their overall sales in general could still be increasing even with all these kind of contractions the overall market is seeing. So and there's a lot of companies like this, right? I mean, so Billy, I think that's it on my end here on this topic. Any final thoughts you might have on this space before closing out?
Not really. I did catch the Micron CFO did appear at the JP Morgan conference this morning, and he did say server demand has been weaker than they expected in the current quarter. So it looks like again, just general compute is still depressed, and we're still waiting on the turnaround. And it's probably going to have to take the Federal Reserve either pausing or inflation getting back to target. These macroeconomic factors. I don't think companies are really going to spend until this inflation and high rate environment is over. They're talking about pausing interest rates this month, but we'll have to see how the data shakes
Mhm.
out.
Thank you for that, Billy. I think this is a great way to end this topic, and I know the viewers appreciate you joining me on this video today.